Good morning. This is the BizNews Daybreak. I'm Asimenite. Coming up, the latest from global markets, a look at how illegal mining syndicates are operating inside South Africa, what Iran may actually want out of this conflict, why investors are already looking past the war, how the South African government is rethinking its property portfolio, and a warning about a potential new economic shock coming out of China. We begin with the global picture. First up, our partners at Bloomberg give us the latest overnight world news.
President Trump says Israel and Lebanon have agreed to a 10-day ceasefire. The president said he held excellent conversations with Lebanon's President Joseph Aoun and Israeli Prime Minister Benjamin Netanyahu, and they agreed to formally begin a ceasefire. We got insight from David Hale, former ambassador to both Lebanon and Pakistan.
We've seen increasing movement inside Lebanon against Hezbollah, and I think that the ability of the Lebanese to accept the terms of this ceasefire is quite extraordinary. And we haven't seen a summit-level meeting between the United States, Israel, and Lebanon ever. It's not just 30 or 40 years. This is ever. So this is a major accomplishment by this administration. But Hezbollah is going to do everything they can to spoil it. The United States is going to try to, I think, disentangle the talks with Lebanon and Israel from our own talks with Iran, although there's an objective interconnection anyway between them.
Now, President Trump's announcement made no mention of Hezbollah, and neither Lebanon nor Israel have confirmed the cessation of their hostilities. At the same time today, President Trump said prospects for a deal between the U.S. and Iran are looking good.
We're doing very well, I can tell you. Maybe it'll happen before that. I'm not sure it needs to be extended. Just so you know, Iran wants to make a deal, and we're dealing very nicely with them. We've got to have no nuclear weapons. If we do, that's a big factor. And they're willing to do things today that they weren't willing to do 2 months ago.
Trump went on to say there could be another round of talks between the U.S. and Iran in Pakistan this weekend. Even so, some leaders of Gulf and European nations believe the U.S.-Iran peace deal will take about 6 months to be brokered. We go to earnings news next. After the bell, Netflix reported quarterly earnings below expectations, and the company's profit outlook for the current quarter also missed forecast. Here is Netflix co-CEO Greg Peters.
We ended last year with more than 325 million paid members. And as that number continues to grow, we are entertaining an audience that is approaching 1 billion people, which is an exciting milestone to strive for. And it'll be an exciting milestone to achieve. But even given that number, we still have plenty of room to grow into our addressable market.
That is Netflix co-CEO Greg Peters speaking on the company's earnings call. Netflix also said co-founder Reed Hastings will leave the board of directors when his term ends in June. Shares in Netflix were down by more than 8% in late U.S. trading. The U.S. government is preparing to make a version of Anthropic's powerful new AI model available to major federal agencies. Previously, U.S. officials urged private sector organizations to use this model, Mythos, to improve their cybersecurity, and the Treasury Department had been seeking access to Mythos in order to uncover its own software flaws. Well, now the White House Office of Management and Budget is moving to allow U.S. agencies to begin using Mythos. Now, before the model's limited release, Anthropic briefed senior U.S. government officials on the full capabilities of Mythos. This included offensive and defensive cyber applications. Crude oil prices rose today as the market weighed prospects of an extended ceasefire against chances the Strait of Hormuz will remain blocked. WTI for May added 3.7% to 94.69. Fatih Birol is executive director of the International Energy Agency. He said it will take time to recover a significant share of oil and gas production.
The situation will gradually improve, but according to our analysis, it can take up to 2 years to see the big chunk of the production coming back to the before war levels. It will improve gradually, but it will not be immediately coming back to the pre-war levels. And some of them may be even longer than 2 years, especially some of the LNG terminals.
That is Fatih Birol, executive director of the IEA, speaking earlier to Bloomberg.
Now, back home, attention is turning to a growing security and economic threat. BizNews editor Alec Hogg speaks to Devet Dutoit, who is involved in efforts to counter illegal mining in the Blyde River area. The picture that emerges is very different from the usual narrative. Organized, heavily armed syndicates operating across borders and causing environmental and economic damage on a large scale. Here's that conversation.
Yes, so the heavily armed enforcers in this industry, generally in South Africa, especially in this part of the world, is the Basotho people. They are from Lesotho and they wear these blankets. I'm not sure if you've seen them before. They shot they became famous through the Black Panther movie, and they depict them in that movie wearing these very colorful blankets. They typically have some military training. Not all of them do, but the Basotho famously they mastered mountain warfare, and they were one of the few African tribes that never bowed down to either the crown or the Boer Republic. They used mountain warfare to their advantage, and that's what you see here in Pockrum's Rest up until today. Now these foreign groups have kind of entrenched themselves in this area. They are heavily armed. They use small arms, sometimes even up to RPGs, and they are the enforcers. So they are the criminal group that uses violence to set down the rules and the laws for the Zamazamas. And before you are tempted to think that this is just another type of security for the informal mining, the brutality that these guys are capable of is something that's kind of hard to get your mind around. We're talking about mass killings, mass burials. You must remember that within the illegal mining, you generally have three groups. It will be the Mozambicans, the Zimbabweans, and the Basothos. And a lot of these guys, if not most of them, if not 99%, are undocumented. So when a body with a bullet hole or a head chopped off is deposited next to a road, the police is not going to even bother with paperwork if it's an undocumented person. And so they are not held by the same kind of laws and regulations that we as normal citizens are. And that is part and parcel of the problem. And this is also why you see the utilization of poisons like cyanide and mercury that's just completely unregulated and making its way into our water systems. I mean, we are in effect talking about complete water systems from source to ocean being poisoned. And actually, if you think about it, it's an international crime. It affects our neighbors. These water systems flow all the way through the Kruger Park, straight into Mozambique, and from there it goes into the Indian Ocean. So even if you're consuming tuna or you're consuming some other kind of meat, ocean fish, sea fish, you're getting in some of this mercury that's being dumped into the water systems.
Now, the Middle East, there's a broader question about what Iran is actually trying to achieve. In the Financial Times Rahman review, Gideon Rahman speaks to Suzanne Maloney of the Brookings Institution, who argues that Tehran's objective isn't just survival, but to come out of the conflict with greater leverage. Take a listen.
Well, I think from the start, the Iranians understood that this was an existential moment for the regime. And so they have responded with a very clear and deliberate plan to try to ensure that the regime survived. But also over time, I think their goal has been to come out of this war stronger and with some sense of deterrence against the United States and Israel. They don't want to see a repetition of what has now been 2 rounds of conflict between the parties. So I think if they were to assess where they are today, it is very much having achieved that goal, like keeping the regime intact, gaining to some extent the upper hand by the control of the Strait of Hormuz, and to some extent also dictating the shape and the pace of diplomacy.
And we'll get on to what the diplomacy might look like in a second. But I mean, it's striking that you say not only do they want to emerge from this conflict stronger, despite all the bombing that's happened and the killing of their top leadership, but you think it's quite likely. And if you listen to President Trump, he'll constantly say they've been devastated, they barely exist anymore. But you actually think it is plausible that despite the pummeling they've taken, they'll come out ahead.
Yes, and I don't think that was inevitable at the start of this conflict. Certainly in the opening hours when the initial strikes were evident and the president released a video that essentially called on Iranians to seize their government, I think it could have gone in any number of directions. But it's also been clear from those early moments that the Iranians had a plan, that they were prepared for this, unlike the June 2025 conflict, in which I think they were to some extent caught off guard by the decision to launch the strikes, even as negotiations appeared to be still viable. This time around, they had a strategy and they were ready to implement on it almost from the very beginning. And so we saw the kind of early strikes against their neighbors. Again, that shouldn't have been a surprise, but it appears to have been to the United States. And that those strikes were targeting soft targets in the beginning and then clearly directed at economic and energy infrastructure. The Iranians have always said that if they can't export their oil, that nobody else from the region will be able to export their oil. And I think most of us understood that they were prepared to deliver on that. How effective they could be at a time where they were being bombarded by 2 militarily, technologically, economically superior adversaries was always in question. And there, I think we're going to take a lot of takeaways from this war in terms of the new way of war, just as many have been doing from the conflict in Ukraine, about how a weaker adversary can actually take advantage of ingenuity, of opportunity, and really seize the advantage. And that's what I think the Iranians did, even within the first week of the war. And while they continue to suffer pretty severe damage to their infrastructure, the toll from this war will only be really fully understood in the months after the conflict ends. I think the regime itself, by sending the delegation that they sent to Islamabad, a very high-level, capable delegation, and continuing to retaliate in ways that are not wild and unfocused, but very deliberate and targeted, and also measured in terms of how they're using their residual resources. I think we see the capabilities of this system that were definitely underestimated.
And while that strategy plays out, markets appear to be taking a more optimistic view. Ed Yardeni, president of Yardeni Research, says investors are already looking past the conflict, treating it as temporary and focusing instead on underlying economic strength. It's a familiar pattern, geopolitical shocks followed by a fairly quick return to fundamentals. Here's Ed Yardeni.
Well, it's interesting when you look at the history of geopolitical crises, especially as they affected the S&P 500. History shows that geopolitical crises turn out to be great buying opportunities. So just when everything looks most dire and grim, that's when investors come in and conclude that the war will eventually end and peace will follow. So I think that's the situation we're in right now, as investors are looking past the war, figuring that it's not going to last much longer. They could be wrong about that. Much depends on how the Iranian regime responds to negotiations. Both sides are kind of dug in. The U.S. thinks that we've won, and Iran thinks that they've won. And so nobody's ready to concede much.
Ed, you called the bottom to the market on March 30th. I'm just wondering whether there is a sense that investors are dangerously complacent. I mean, some are saying that the lasting impact of this Iran war is going to be stagflation. Is that being priced in or not?
Right. Well, for a while, there was a concern that the relevant decade that we had to worry about was all of a sudden the 1970s, the stagflation of the 1970s. We had 2 energy shocks. The second one was, of course, related to the Iranian Revolution. And those energy shocks spread very quickly into other prices. and caused a recession. And it wasn't until late in the 70s when Paul Volcker came in that he slammed down the monetary brakes, and then we had a really very severe recession at the tail end of the 1970s. I think that's still a concern. It's still a relevant analogy. But I've actually been talking about the roaring 2020s, the 1920s as an analogy. The economy has been remarkably resilient. I mean, when you think of all the stress tests that the economy has passed since the beginning of the decade, it's really quite impressive that we had the pandemic, the 2-month lockdown in the United States. Then we had the supply chain disruptions, the surge in inflation, the Fed raising interest rates dramatically, little mini banking crisis in 2023, and then tariffs last year. And here we are with real GDP at an all-time record high. It does look like it slowed down in the fourth and the first quarters, but I think a lot of that was actually weather-related. We had some really bad weather, and I think the spring's going to be pretty strong.
Now back to South Africa and to how the state manages what it owns. Public Works and Infrastructure Minister Dean Macpherson says government needs to start treating its vast property portfolio more like a commercial asset, making decisions about whether to sell, retain, or invest, rather than simply holding underperforming properties. Here's Dean Macpherson.
So just to give some context, people often forget, Alec, that we are the largest landlord and owner of property assets in this country. Notionally, we are 3 times the size of Growth Point Properties, and I know Estienne de Klerk very well. The difference between Estienne and I is that his company declares a dividend every year. I declare nothing. We don't get a single cent. We make nothing. And it's insane. It's madness. And that is why one of the key fundamental things that we've said, ladies and gentlemen, so we have to start running our department as an asset management business. You own assets, you must then do something with them. And you look at every decision on a commercial basis. Do you sell? Do you retain? Do you put it out for investment? Do you invest? And that's why having Minister Simmers, the 775 state-owned land parcels just in the Overberg represents opportunities for the district as well. And having none of those specifically in the Hermanus area is more opportunity that we should be looking at and how we can do that. And I've always said, ladies and gentlemen, the state cannot own everything and it cannot sell everything. But what it cannot be a manager of bad buildings and invaded properties. And that's why I know that it's maybe incredibly unpopular in some quarters, but I've said that our assets are not open to be invaded, to be occupied, and not to be put to work. And that's why the issue at Knoffelskrull has really come into the fore at the moment, because I've said very clearly the rule of law must be restored, and that we must ensure that that land and that opportunity is correctly identified.
And finally, a global story that may have longer-term implications. The Financial Times is warning of a potential second China shock, driven by massive state subsidies that are allowing Chinese manufacturers to produce high-quality goods at very low prices. That's creating pressure not just for Western companies, but across global supply chains. Here's more from the FT News Briefing.
China has managed to generate world-beating champions in things like electric vehicles, solar panels, batteries, wind turbines. How has it managed to do all of this?
Yeah, it starts and ends with the government. For any Chinese company getting off the ground, there are really a ream of subsidies, financing, all types of policies to help them. And so there's incentives for every local government is to recruit new companies and help spawn new companies. So really they're competing with each other to bring in companies that produce locally and hire locally. The more factories that any local government has, the more tax revenue they're getting. And at the same time, China's currency is weaker than it's been in years. The IMF has recently said that the currency is undervalued by 16%. So that helps all the Chinese companies as they go abroad. The goods that they're making are even cheaper.
So those subsidies and support from the government might seem like a good thing for Chinese companies that ultimately want to stay in business, but it has created a lot of problems for those companies. Walk us through some of those.
Yeah, at least to start, it's a good thing because it helps all these companies in new industries get off the ground. The problem starts to come when every locality has their company that is now producing and competing against other companies, and there's just too much capacity of the various products that are being made.
What is the impact of all of this on China's trading partners?
Yeah, I mean, it's super interesting talking to people who work at Volkswagen on the ground here in China. They've been sitting here watching these Chinese EV makers innovate, just pack more and more technology into their cars. And they've kind of been caught flat-footed as everything's been done out of Germany. So they can't really work at the same speed as their Chinese competitors. So within the last couple of years, Volkswagen has really pivoted to giving their local Chinese unit much more autonomy. And that company there is going to be developing and engineering all of their new models for China. And eventually they see it as also their place to produce low-cost vehicles for the global south, the Middle East. And it's still not entirely clear, but maybe someday Europe and the US.
So how concerned are China's trade partners about all of this?
It's kind of playing out at an odd moment where there's so many disputes between the US and Europe that there's not really a unified point of view on dealing with China's excess overcapacity. But definitely for Europe, it's an existential shock that all these high quality Chinese goods at really low prices are kind of fixating on the European market right now because tariffs in the US remain pretty high.
And that's BizNews Daybreak for this morning. I'm Asim Enyite. Thanks for listening. I hope you all have a wonderful weekend, and we'll keep you updated as these stories continue to develop. Cheers.